Hello again, everyone. This is Joe Hentges with Beyond the Chart, and in this technical analysis of the stock market video, we're going to review the S&P 500, the Russell 2000, a couple key ETFs, and then take a look at the one commodity that outperformed gold this week. So stay tuned. All right, let's start off here with the S&P 500. So this is the daily chart. You can see here, I've got my wave count. I continue to believe that we are in a sideways push, a flat, and what we call an Elliott wave flat, which shows an A, B, C move back here. We've now broken this trend line in this move, and we've now got two consecutive closes below the 10. Now, just because we got the two closes below the 10 doesn't mean that this is automatically turning over. But if we continue to break, we break the lows of those 2 days, and especially take out the lows right in here, I think we're going to be well on our way. Let's take a look at the weekly chart of the S&P 500. You can see it hasn't closed down below the 10-week moving average yet. So we're just getting a little bit of a pullback. Don't have the turn. But that's what I'm looking for, and this is the wave count that I've got. The monthly chart shows that back here in January, and let me double check this, but yes, it did. It just barely, the 10-week broke below the 21-week in January. And so this has been the fourth month. Now we popped back above it right in here, these last two months. And one thing I just want to point out, the Dow did the same exact thing back in May of 2001. And then the next 4 months were nothing but straight down. Now, there's no guarantee that just because the Dow did this same kind of pattern that that's going to happen here. But it's interesting that we do have the moving average cross on a monthly chart. And the last time it did that was back up in here in early 2008, and prior to that was when it did it right here in January 2001. So those are the last two moving average crosses of the 10, crossing the 10 exponential, crossing below the 21 simple moving average on the monthly chart, on the S&P 500. The other thing I notice on the S&P 500 is this is a very compressed trading range for the month. And, again, as I've told a lot of the viewers who've watched my videos for a long, long time, I always believe that compression is followed by expansion. And the last time we had a month that was this compressed was back up in here at the top a year ago. So it's going to be really, really interesting to see what May holds for the S&P 500. All right, let's take a look at the Russell 2000 on a daily basis. Now, this came down hard the last 2 days, and this is the first close below the 10-day moving average. Again, we had a cluster of them down here. We had a couple here. So we need follow-through for this thing to continue to move and roll over like I'm expecting it to. Now, the Russell 2000 on a weekly basis, as you can see, it is trending down. Now, and on a weekly basis, look at the candle that it just put in here. This is an outside down candle, almost completely engulfing, but it went to a higher high and a lower low, and it closed down. And like I said, it was almost engulfing. The last time we had a candle like that looks like back here at the December 4th high. So it's going to, again, this looks like a very interesting development on the candle in the Russell 2000. Russell 2000 on a monthly basis. This has been, had the moving average cross here for several months now. And you can see the compression here also on the Russell 2000. And again, this moving average cross the last time was back here at the top of 2007, 2008. And then prior to that, you had the initial cross back into early 2001. But you could see sometimes, this one rolled over hard back in 2000 to 2001, basically 2000 through 2002. There was some choppiness in all of the markets in the way it came down. So you never know what you're going to get. All I know is that it's starting to trend down. We're getting a series of lower lows and lower highs. and especially, you know, when you see it on a weekly chart, you know, that it's pretty clear. All right, let's take a look at one of the indicators. I can't show all the indicators to look at because that's what I show my insider members on a daily basis. But the high-low index, it's really interesting. It's been doing nothing but going sideways in this area here. Now, it did push higher in mid-March than what it had been for many months, but then it just stalled out. It's just, you know, gone choppy right in here. And on Friday, they had 90 more new highs and new lows. So we're not getting any kind of dramatic push in this at all. And so to me, I'm just, you know, when this starts to break below the zero line, that's going to be a sign that this thing is definitely rolling over and you know, should be in sync with the way the market's rolling over. All right, the next one we're going to take a look at is the semiconductors. The three key ETFs I like to look at related to the economy: semiconductors, home builders, and the financials. So the semiconductors have rolled over. They've got a moving average cross. Yeah, we had a little snapback, pullback. That happens a lot of times, especially after a moving average cross. Here's the first pullback, and then boom, it's coming on down pretty strong. So I think right now I'm counting this as the second minute wave back up in here within the third wave down. So that's the picture I've got on semiconductors. And the next one is the home builders. Where are we? There we go. Home builders, similar type picture, although not as strong to the downside as the semiconductors in terms of the moving average cross. It's just starting to happen. Well, we got two consecutive closes below the 10, so it does look like it's starting to round over. And then the last one of those is the financials in terms of key ETFs. And this one is not as, I mean, clearly it's the weakest of the three at this point. We did get a close below 10, but it's just a little doji candle in here, and it's going to have some work to do. Now, one thing I just noticed, the trend line for this move from February would be right here. So when it breaks that, that's going to be really, really key and a sign that the move on the financials is basically done, and they'll be heading south. All right, the two big movers this week, IBB, the NASDAQ Biotech. It was down pretty hard, especially look at this last, what, 1, 2, 3, 4, 5 days in a row. It definitely looks like it hit this resistance area in here, and it's rolling back over very hard. If we go to a weekly chart, you can see that clearly the trend is continuing to trend down, and this looks like the biggest down week for the IBB since January, the week ending January 29th. So it looks like it's wanting to continue the move to the downside. And then the last one we'll look at is the one commodity that outperformed gold, and that was silver. And this is a weekly chart on silver. You can see a big move the last 3 weeks, continues to push. Now, one thing it looks like it might be getting a little bit of the resistance right in here. The high on this point here is 1696. It closed 1698. The next key resistance level is going to be right at this high, 17. Let's call it 1770. All right, because that was where we had a low, close to another low, and then we got a high. And so I think we continue to push. We're going to run into some significant resistance there. If it pushes above that, we'll have to assess, but right now that's going to be the next hurdle. Okay, that's it for the weekend. Hey, if you're watching this anywhere besides my website, head on over to the website. Check out the post. I've got a really interesting post about Apple and Amazon in the summer of 1997. So check it out. All right, everyone, have a great weekend. Talk to you on the next video.